Well, it is now 8:35 on Thursday, and that's the time we bring in JC Peretz. JC is the founder of Eagle Bay Capital, a 10-year veteran and market technician who actively manages money incorporating technical analysis and behavioral finance. We are ringing JC.
Hi, this is JC.
JC, it's Joel and Dennis from Benzinga. You are live on the air. How are you doing on this Thursday morning?
I'm doing great, guys. How are you?
We're doing good. We're doing good. We just, kind of noticed the window dressing from yesterday. Did get some nice pops and some stocks here, and I know you have been preaching over the last couple of weeks. You're selling pops and selling rips as opposed to buying dips. Did you have anything either yesterday or today getting near the area where you want to take some shots on the short side?
Well, no, we didn't get any rips. We've been selling out for 2 weeks. So, we've gotten the opposite. We got exactly, what I was hoping for was further selling. But I actually think that we get a counter trend rally here. I think you buy stocks here. I think we got great opportunities this week on the long side. I've been a huge advocate of selling rips, really since the end of August, when we originally broke all of that support. But I'm seeing a lot of good things in terms of, from a risk reward proposition that you can buy. I like some of the emerging markets. I like Brazil, Latin America. I like Germany. I think we get some counter trend bounce.
What about that? So you're a little bit changed sentiment here, getting bullish here all of a sudden. What do you think of oil here? Because we had a lot of oil stocks really breaking out there yesterday for the first time too. Do you think it's safe to nibble your toe in some of these oil stocks like Exxon, Chevron, Conoco, all kind of broke out a little bit yesterday from their trading range?
Well, oil itself or the stocks? I look at them. I look at them differently. I think you have a point with the oil stocks. First, let's talk about the commodity itself.
Sure.
I've been saying you could be long crude oil as long as we remain above 43.5, which were the lows from the beginning of September, right? Very, very clean support. That's really held. So as long as we're above that, you can be long all day. The problem is that the overhead supply isn't really that far away. So from a risk-reward proposition, fine, the risk is very well defined, which I love, but how high can it go? I think you got to be selling it around $50, low 50s. So risk-reward wise, 10, 15%, depending on your time frame, that could be a lot. And in the futures market, that is a lot. So you can look at that. In terms of the actual energy stocks themselves, you can get a pop. Exxon, we can see low 80s. That wouldn't surprise me at all. Chevron, probably get up towards $90. And the risk is very well defined as well, very similar to crude oil. The lows since the end of August, really. In the case of Chevron, you're looking at 74.5. In the case of ExxonMobil, you're looking at 70, 71.5. So you can base your trades off those levels. So the risk is very well defined, which I like. But again, just remember that let's put things in context. Just because tactically there are long trades to be made doesn't change the fact that structurally this market is still in a hell of a lot of trouble, and we still want to sell overhead supply. The problem is we've been crashing for 2 weeks. So I think from here we can see some counter trend rallies. But again, I want to reiterate, this comes within the context of, we're in downtrends across the board. One thing I want to point out is small caps. Look at the Russell 2000, IWM. We put in lower lows below the August. You guys call them flash crash lows. Whatever those late August lows were, we broke below those and quickly reversed. I use the 14-day relative strength index for momentum. That put in a higher low. That's what we call bullish divergence. You look at mid caps, MDY, same exact thing. Lower lows on a closing basis this week, higher lows in RSI. Look at microcaps, IWC, lower lows on a closing basis, higher lows in RSI. All of these are pointing to counter trend rallies. And you could use the recent lows from the past week where we only want to stay long above that, and then we want to sell the overhead supply from 2 weeks ago.
All right, then you're looking at these longs, not necessarily you're just rat crazy bullish the market, is that you're seeing setups here where you know where your out is, good risk reward ratio. You'll take the setup. If you're wrong, you're wrong. You have your out. So once again,
Precisely.
using good risk management. Now I'm going to ask you about this one, even though I think I know the answer. Is one of the stocks you are looking to buy Apple?
Now, the risk reward isn't this is just a math. I know people are obsessed with it because it's the biggest company in the world and they make great products and everything. But this has been, you guys, we wanted to take profits in Apple in February. It did nothing, and then once we broke, that consolidation resolved itself. We wanted to short it. Once it broke, 118, something like that. And it hit our target very quickly at the end of August. And now it's just in no man's land. I see no reason to buy it. I mean, yeah, what are we doing? Even pre-market, we're selling off. I mean, what are you going to buy it against Tuesday's lows? I don't see it. I guess you could do that. I'd rather be selling risk, like I said. If we get up towards 118, 120, we want to be fading that. If we get up there, who knows? We'll worry about it when the time comes. But this is just in no man's land. It's a mess. Both longs and shorts are frustrated. I don't envy anybody who's in this.
Carl Icahn comes out yesterday or the day before, and he's given this overall warning for the market here. Do you think this warning still holds, or do you think he's a little bit late to the party? Because it would have been nice to hear a warning about the overall market 2 months ago before we had the massive sell-off. What were your thoughts, just, Carl Icahn coming out and now giving a warning on the markets, as obviously we've already had a significant sell-off?
I don't know what he said. What did he say? He said the market's going to go down?
Yeah, basically, he just was coming in saying that he just saw a lot of, pending disaster here, I think is what his words were coming out. So obviously, he's had a really rough year with his own investment portfolio. I believe his fund is down 30 or 35%. So it's been a rough one for Uncle Carl there. I think the market, maybe, he spooks the market when he talks. Everybody kind of listens there. So he's trying now to say that, maybe there's a lot more downside here. I just don't know if the downside, it's a lot. We've had some pretty good downside already, like you were saying, JC.
Yeah, I mean, we've been saying to sell the market since March, as you guys know, every single Thursday. So I'm not really sure what I said. I also don't know what his time frame is. Are you saying like it's going to be a disaster like tomorrow, or
no? He's a little longer time frame.
I
think he's talking in the years. Like he's always a little bit longer time frame for sure.
Yeah, I mean, I can't speak for him, so I'm not really sure what his objectives are. I didn't hear what he had to say, but I think it all depends on what your time horizon is. He has $30 billion, so he can't just press a button and go to cash.
Yeah,
he can. So
great point.
We can also, me. I've been bearish for, I've been bearish for 6 months now. And, I'm talking about how we can get counter trend rallies. So although I've been bearish for 6 months, this week I could just flip on a dime and I've seen enough evidence where, to me, the market suggests we're going to get a counter trend bounce. And remember, within downtrends come the most powerful rallies. Go back in history and look at the best stock market days of all time, and they're all during bear markets. They're all during market decline. Remember all those sick rallies that we got in 2008 and the fall of '08? We got the most epic rallies we've ever seen ever. Look at the rally that we got at the end of August, for example, in the S&P 500, monster 2-day rally, to close out the month. I think we could potentially see something similar. Maybe not as crazy because, the volatility index is much lower. So the market is pricing in, less intraday, moves from low to high. But, again, getting back to time frame, yeah, I think the market goes lower, for sure. But that doesn't mean that I don't think right now we're going to get a counter trend bounce, and I think we do. I think that's exactly what we're going to get. But you fade the highs from 2 weeks ago. So it comes within the context of what I think is, further downside. All of that overhead supply that's been annoying the hell out of me, for over a month is still there. That hasn't changed. Problem is we've been crashing for 2 weeks, so we're so far away from that overhead supply that I think there's good risk-reward proposition. And, oddly enough, me, I do a lot of, global analysis. I think it gives good context. whether you trade international stocks or not, doing a trip around the world and looking at all of the individual countries one by one, I think just gives you great perspective on things, whether you trade them or not. I think doing that religiously, I think really, really gives you a leg up to see what's really going on around the world. And what I've noticed is that the countries with exposure to commodities are the ones that seem to have these bullish momentum divergences and, seem to have a lot of the upside. Those and Europe. Europe looks really interesting. Look at Germany, France, Spain, all of those. A lot of bullish momentum divergences across the board. So I think those are the two areas that, that I'd like to focus on. And then the smaller caps, not necessarily the large caps, but like the Russell 2000, the mid caps, micros. Those are the ones that stand out to me.
All right, JC. Let me take an opposite view here, and just going. A buddy of mine, that's really a strict technician, was pointing out and on the charts how we had that dip in last year in October. You had that wick, that big candle, the Ebola lows, as we like to call it. And then you set the stage for, a major rally up to new all-time highs. Now, if you're looking at the chart, it's happening in September or late August and September, a little bit early. I mean, could it just, a possible scenario where we've just, hit that 1821 to 1861 we hit yesterday? We're just, that could be a long-term bottom, and we could just, obviously we got to break above, 2000. Do you see any chance of that scenario? And I know me coming out being real bullish is might be surprising a little bit.
I'm shocked too.
Yeah, but I mean, if you look at that, I mean, and another thing too, and Dennis, I was going to discuss this with earlier. I think I'm almost going to take out the Ebola, or not the Ebola, the flash crash low at 1921, and my new number is that low that we hit on Tuesday, because that it traded there. That's where you had two closes after the flash crash. So I'm moving. I'm firmly in the bullish camp here until we take out that low from Tuesday. JC, any chances that's a long-term bottom?
I seriously doubt it. I give it maybe like a 5% chance. But here's what I will say. Getting back to that October low from a year ago, we were able to rip right through that because there was no overhead supply, right? We just dipped and we reversed and kept going higher within the context of the uptrend. The problem that I see is that huge range, that consolidation that we've had all year that resolves to the downside. Remember, every single Thursday, you guys are like, all right, JC, what do you think about the S&P 500? Every Thursday for 6 months, I said, you don't touch it. There's no reason to be in this because we're in no man's land and we wait for a resolution. That resolution was to the downside. So
True.
All of that range where I was telling you guys there's no reason to be in the S&P 500, all of that becomes overhead supply. Those are all people that are left holding the bag, that never sold when they had to, and they're waiting to just, that's the please just wait, get me back to even crowd.
Yep.
That is just sitting there waiting to sell to you. That's overhead supply. We didn't have that last October. So that's the problem. The reason, so that's why I'm saying there's no chance that we just rip and go keep ripping. The reason I say there's a 5% chance that you're right is because through time, this week's low can potentially be a bottom, but it's not going to happen like October. It would be a scenario where we continue to consolidate, we absorb all of that overhead supply, but that will take time, and then perhaps in the first or second quarter, then we rip on new all-time highs. But that's the 5% chance, I think, of you being right. But that's not going to happen tomorrow. That's going to take a long time. So I would still look at this market as guilty until proven innocent, and we're heading a lot lower, but I think that we do see a counter-trend rally here. But it comes within the context of a much bigger problem, and I think this counter-trend rally, you fade the highs from a couple weeks ago.
Great points there, JC. Completely agree with you on the overhead supply issue. BWXT from Rob Hood in the chat. He wants your thoughts, technically speaking, on this little company, BWX Technologies, which is BWXT.
Yeah, I see. Looking at it, look at it long term. We're trading below all of that support since late summer last year, and below a flat 200-week moving average. So at best, we're in a sideways range. At worst, we're in a downtrend.
Wait, I think he might actually, it was as Boy Walter X-Ray Tango. So BWXT, because I'm looking at this stock chart and I only see 2.5 months of data, so I think you might have been looking at the wrong symbol. So BWXT.
I have BWXT. That's what I have.
What's
And,
it?
BWX Technologies?
26, yeah, 2638 last.
Yep, I see it. Yep.
Okay,
And
okay.
it got down at the end of June, and it's below all of that. All
Yeah,
that form of
yeah.
support from
Okay,
the
I
second
think you
half of
said last year, which threw me out. You just meant last month. Okay.
Yeah, looking at this one.
This is a prime example of the please just get me back to break even crowd. You know, they're just sitting there waiting to sell to you. We're below a downward sloping 200-day moving average. I mean, you want to talk about terrible stocks? I mean, you know, this is a disaster. You want to fade any and all strength. I mean, you can only pray that it gets back to the 29.5, something like that. If you do, you want to be selling that very aggressively. This is not something you want to be buying. It's something you want to be fading.
Gold, JC, is that any place to hide here? It hit the 1150 area, back at 1100. Been dead money for quite some time. Any thoughts on the gold market?
Yeah, I think it's a great short. I think it's going a lot lower. I think we see $1,000. I mean, it doesn't get easier than this one, in my opinion. I think that this, once we broke all of that overhead, all of that support since last November, over the last year, that broke down in July. We've come back and retested that overhead, that former support, that's overhead supply. We're rolling over nicely this week. I love it. I think if we break the uptrend line from the July lows, I think that's all she wrote. We go down to 1,000. I was writing about that earlier this week. We've continued to sell out since I wrote that. I love it. I was writing about silver, about a week and a half ago, saying that was a good short. I think it goes lower. I think the tell here is platinum. You want to know what precious metals are doing. Platinum continues to take lower lows, pointing to, I think we're going lower across the board. I love it.
We've been on the line with J.C. Peretz. He's the founder of Eagle Bay Capital, 10-year veteran of the market technician who likes to throw a little behavioral finance into his work. J.C., thanks a lot. Breath of fresh air here. We'll see if that rally materializes.
I appreciate you guys having me. Again, I think the market's in a lot of trouble, but I think short term, I think we might see some counter trend stuff, and the risk is really well defined. You can't ask for more than that. Love it. Good luck, guys. Go get 'em.
That's what it's
Thanks,
about.
JC.